Hey everyone, super microcomputer stock has been soaring of late and rightfully so. The company is one of the few that have been benefiting from the rising effectiveness of AI, with its revenue soaring more than 100% in its most recent quarter. But where could super microcomputer stock be in 2026, 2 years from now? That's the question I'm going to look at in this video, using some financial analysis, making some forecasts, and using some estimates to make this stock price prediction. So follow along and let's make this interesting forecast. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Alright, so one of the numbers I'm going to need is Super Microcomputer's current trading price, which is $579 per share as of this recording. And like I mentioned, look at how much this stock price has exploded in the recent year and a half. From January of 2023 until now, it's up nearly 6x in that time. And just in the last few weeks, it's up more than 90%. And I've recommended Super Microcomputer stock as a buy. In the first couple of weeks in the year, I highlighted that even though the stock was up 80%, I still thought the stock was a buy, and it's up even more since then. So this AI stock is certainly catching that trend, benefiting from the growth in this market, and it continues to capitalize in this industry. I also need Super Microcomputer's price to earnings ratio. You can see it's trading at a price to earnings ratio of 45.22. The price to earnings ratio is different than the market price. The price to earnings ratio measures valuation, the value you're getting for the price you're paying. You can see right now, Super Microcomputer stock is the most expensive it's been in the last 5 years, and by a wide margin. It hasn't been this expensive ever in the last 5 years. In fact, it's nearly twice as expensive as its previous high, trading around a price to earnings of around 22 and a half in 2021. Now it's up to double that valuation of 45. Now, some of that is justified because the company's revenue and profitability is soaring. Management thinks this is going to continue. It's investing, expanding capacity. Wall Street is optimistic. Wall Street forecasts the company's profit and revenue to continue soaring. So, of course, the valuation will increase when the prospects of a company improve as much as Super Microcomputer's prospects have improved in the last year and a half. Speaking of Wall Street, we need Wall Street 2026 earnings per share forecast for Super Microcomputer, and that's this number here, $26.24. I mentioned how enthusiastic Wall Street is about Super Microcomputer. It thinks its revenue is going to grow from $18.39 in 2024 in the June quarter that ends 2024, which is still fiscal year 2023 for Super Microcomputer. And then that's going to jump to $20.90 in the quarter that ends June 2025. And that's going to jump to $26.24 in the quarter that ends June 2026. All while its revenue is expected to jump from $11.5 billion up to $15.31 billion. So you can see how enthusiastic Wall Street is about Super Microcomputer stock, expecting its earnings and revenue to grow in the next 2.5 years at the very least. And given that the AI market is only getting underway, how it's only just beginning to expand, I think the growth for this company and for the AI market overall is going to continue beyond 2030. I think we're just in the very beginning stages of AI. A large language model like ChatGPT really put AI on the map, but I think there's more to come from AI. I think there's greater benefits from AI coming, and I think investors will start to see those in the coming years, and that'll create another leg of enthusiasm for AI stocks like Super Microcomputer. All right, so all that being considered, if Super Microcomputer does indeed deliver $26.24 of earnings per share in its quarter that ends in 2026, and the price to earnings remains the same at 45, then its stock price could rise to $1,100.80. Now that would be a nearly doubling from its $579 per share it's currently trading at. And given that it's already up by more than 6x in the last year and a half, that would create a significant windfall for super microcomputer stock investors. Although I don't think this is the most likely scenario. More likely, I think its price to earnings ratio will normalize and fall back to its longer term averages as its growth rate starts to come down over the next year, year and a half, 2 years. Yes, it's going to grow very quickly, but that rate of growth is going to slow down. And as that rate of growth slows down, I predict that its price to earnings ratio will decrease. Now, I've got 3 other scenarios here to consider. If its price to earnings were to fall to 35, then the stock price could rise to $918 per share. Again, that would be a nice increase from the $579 per share it's currently trading at. But what if the price to earnings were to fall to 30? Then the stock price could rise to $787 per share in the next 2 years. And finally, if the price to earnings were to fall to 25, the stock price could increase to $656 per share in 2 years. Now, given that its price to earnings is at the highest level it's ever been, and on average, the highest it was before this boom from AI was around PE of 24, I don't think it's going to stay at a level above this for a longer term. I think a price to earnings of 30 is a reasonable forecast for super microcomputer for the next 2 years. So my best case, my most probable outcome would be around this stock price. So as is usual, when I make these stock price predictions, I don't like to be precise and say it's going to be $787.20 exactly. I don't like to do that because there's so much uncertainty when we're making a prediction. Nobody knows what's going to happen in the future, not even Wall Street analysts that follow super microcomputer stock. So all of these estimates and assumptions we're using is open to a lot of adjustments and error. So I like to target a range. And the range I would target for super microcomputer stock would be between $775 per share and $825 per share in 2026. That's where I think the stock price could be if the company does indeed hit this earnings per share target in 2026. But I'd be interested to hear what your thoughts are. I would like to know if you think that is a too conservative price prediction or if it's too optimistic. I'm curious, and let's start a discussion in the comments section around where you think super microcomputer stock price could be in 2026. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.